15 for 15. I'm your host, John Zalkin from RKW Residential. 15 for 15 is a new and exciting video series where we interview 15 influential real estate people for 15 minutes each, where we will get their perspective on what is happening in real estate during COVID-19. A little bit about RKW. RKW Residential is an award-winning third-party property management firm with over 20,000 multifamily units under management and a growing footprint spanning 6 states. RKW delivers expertise in multifamily management through its technology, marketing, and customer experience platforms. My guest today is Felipe Echarte from Marcus & Millichap. Felipe serves as the Senior Vice President of Investments, specializing in the multifamily market since 2001. Focusing on multifamily properties in South Florida, he has transacted more than $950 million in sales. Hopefully before this is over, you'll get to the $1 billion mark, Felipe. As an old friend and I guess as a client of yours for years, it's great to see you. I really appreciate you coming on and taking the time for this 15 and 15 episode. As a multifamily guy, it's nice to be speaking to another multifamily guy and really seeing what's happening out there in the multifamily sector and how things are really going. So we'll start it off with just give a little bit more, expanding on your bio. And then just dig right into what you're seeing in the market at this moment.
Sure. Thank you very much, John, for having me on today. Glad to hear everybody's safe and healthy. I've worked for Marcus & Millichap since 2000. Basically on a team with, we have 8 other agents, producers on our team, multifamily. We specialize in multifamily sales across the state of Florida and specifically South Florida. I specialize mostly in sales of private investor properties in Dade County and Broward County as well. And basically what we're seeing in the market right now is that most investors are looking for information, looking for what's happening in the market, what other owners are doing to alleviate or reduce the risk of tenants not paying. I think some of the biggest issues that we're seeing and concerns are moratoriums on evictions. I think a lot of landlords are concerned that obviously tenants will use that as a reason not to pay the rent. But realistically, what we're seeing is that a number, at least as far as January or April goes, that many tenants are paying rent, and the numbers are consistent with how they've been throughout the rest of the year.
Well, that's great news to hear, because obviously we're just into the first few days of April, so no one really knows yet. We'll have more data over the next few days on how rent collections are going. We had somebody on the other day who owns a substantial amount of apartments, and they were expecting about 90% collection rate for their numbers. I was just talking to somebody else who said that their first few days they've collected 56% of their rents. And the follow-up question was, well, what do you do in normal times? And they said, well, we've never tracked that before because we've never had to. So I think everyone is just trying to figure out what's there and what's happening in the markets today. So just to go over a few different things with you, the guidelines that are really happening with Fannie and Freddie. If you could touch on some of the new things that are happening that you're seeing, I would love to hear what you're hearing on your side.
Sure. I mean, we've heard, most recently that, in most cases or many cases, depending on the borrower and the property, they're giving forbearance up to 3 months. But at the same time, it's restricting the landlord from being able to file evictions or evict tenants during the term that they have that forbearance in place. The landlords are responsible for paying back that money or back mortgage payments somewhere between 12 and 18 months from the time that they take that out, from what we've seen. But most recently, as recent as yesterday, I've seen something that said that in certain cases, landlords or Fannie Mae, Freddie Mac on new loans that they're requiring a interest and payment reserve of up to 12 months. I think ultimately, at least right now, they're also increasing the debt coverage ratio from 1.2 to 1.25 up to 1.3 to 1.35. And I think ultimately Fannie Mae is really, Freddie Mac and Fannie Mae are right now just saying, we kind of want to sit on the sideline and wait and see what happens by putting these extra restrictions and deal points in there.
That's really interesting because it's early in the year, and I'm no debt person, a huge debt person, but I know that they get a certain amount of allocations for the year.
Mhm.
So they're sitting early in the early innings, and they're pretty much now on the sidelines, I guess, waiting to see how this all shakes out. So in the wait and see game, you know, I know on the brokerage side, you used to have to, or you still do have to make a lot of cold calls to find sellers, and the hardest part was trying to find a seller to sell his property, because the question back to you always was, well, where do I put my money? Where do I find something? Are you seeing any changes in that, or is it too early in this unforeseen market? I guess we're in. I don't even know what to call this, the new world market.
Mhm.
Uh, is it too early you're seeing that, or are people starting to reach out saying, hey, if you know somebody, I could be interested in selling?
No, haven't really. We're doing a couple of, we're doing opinion values like we normally do, talking to investors. Obviously, most of our conversations have changed dramatically that we're having with investors. Not really pushing sales or finding out what owners are doing with their properties, but really making sure that everybody's safe, everybody's healthy, seeing if they have any questions or regarding the operations of their property. Most of them have questions on what other owners are doing. As far as properties coming out to market, we are seeing investors that are listing properties. We are signing representation agreements, but realistically, what we're doing is holding off from putting properties, or unless the owner wants us to put a property on the market immediately and they have to access their equity quickly. We're advising that it's probably in their best interest to hold off from putting properties on the market right now, let some of this blow over, and let's see what the market's looking at in the next month or 2 months, rather than putting a property on the market right now. I think that there's a slew of concerns, or a number of concerns that owners and residents and everybody involved, vendors, would have with marketing a property, whether you're looking to go through a property or do property tours. Residents don't want somebody, a stranger walking through their property right now. Many agents are probably concerned going out, meeting people at properties. Vendors, if you do get something under contract, the question comes, how do you do inspections? We actually had a property tour or an inspection on a property that we put under contract last week. We had a 32 unit building that we put under contract. We did the property inspections on Monday. Surprisingly, most tenants didn't raise a major concern. There were a few residents that asked us not to go through the property. There was a large number of vacancies in the building, so that did help out. But the vendors were all protected. They had gloves, they had masks, they had what have you. But we just try and reduce the number of people going into these units that just didn't need to go into the unit. So
So
it'll be.
let's talk a little bit more with this deal. I mean, I know it's a smaller size deal,
Right.
but where is this trading comparable to 30 days ago? Is it all cash? Give us a little information on what the real details are on this deal.
Sure. No, we are sticking to, we're listed at, we went to contract pretty close to the list price, fairly close. We had several offers, all in the same range, and, a number of offers at the same price range, that we went to contract at. So we're comfortable with the price. Originally, the buyer was going to be getting bridge debt, and had basically a 30-day inspection period / financing contingency. After doing the inspections and talking more to his lenders, he had, I believe, 3 lenders he was talking to. Basically, everybody's taken a sit and wait type mentality. So one of the items that we're looking to do is see if the seller would consider holding financing, which they are open to doing that, and they're in a position that they could do that. And so we're having to get creative with the financing and figure out how we can still push the deal forward. The buyer came back sticking to the price, sticking to the terms of the deal. The biggest change is, that he's asking the seller for financing, which earlier on in the marketing of the property, they did express an openness to, being open to that, being able to hold the financing. So it wasn't a complete surprise to them, but it would be a way that we'd be able to get this transaction closed in the next 2 weeks rather than waiting another 30 days to get it closed, which if we can get the property non-contingent and scheduled to close in 2 weeks, I think it would be much better than having to wait another 30 to 45 days to see what else is left to happen throughout this process.
And at what percentage of down payment is this person gonna have to come up with? Just like
We're negotiating right now about a 25% down payment. Which I don't know that they'd be able to get on the regular market today, even in a normal market on this property, just because this is an added value deal, has a high vacancy, needs a lot of work. But they are, it is a deal where the question right now comes down to the interest rate, and we're going back and forth on the interest rate right now. So hopefully we can get it done.
Okay. And are you getting a lot of calls from your investors? I know you have a large investor base. You've been doing this for a long time, right? Time
Yeah.
flies in fun. So what are your investors saying? Are they biting at things? Are they just, hey, let me wait to see what's going to happen? Because for us, we're on the management side, so I deal with a lot of my owners. The hardest thing, and we have 2 or 3 deals that will transact in the month of April that are looking like our clients are buying and we'll take over the management, is the old retrade, is hey, what is this property worth today in this new environment? The clients that I've spoken to said, look, we're 10-year holders, and yeah, the next year may be tough, but we're looking at this as a long-term hold. We still like the market, we still like the property, and we feel confident in it. So I wonder if are you getting a lot of calls from like that?
Yeah, I mean, we are getting, most conversations, kind of end with the investors telling us or asking, look, have you seen any good deals out there yet? Or have you seen any opportunities? And I think it's just too early to tell what certain sellers are going to do. I think most owners that are if they are putting the properties on the market right now, are owners that need to access the equity or are true sellers. Right now, we're not putting deals out there or seeing deals out there where the owners are stretching for, if I get my price, I'll sell it. It's just not worthwhile at this point. But what we are seeing is that owners are looking for opportunity, and other properties that we have had under contract that we're scheduled to close, say in the next few weeks. Buyers rather, are looking to extend the closings out. We have one deal that is hard non-contingent. We were scheduled to close probably 2 weeks from, or next week, late next week. The buyer asked if he could extend the closing by up to 90 days. The seller agreed to 3 30-day extensions by the buyer releasing portions of the deposit to the buyer, or to the seller rather. So he knew that even if the buyer did bail out of the deal or drop the deal, he'd forfeit his deposit. The seller already has his deposit in his bank account. So it makes him a little bit more comfortable. But other than that, there's, I think that most buyers are right now trying to extend the contracts as long as possible to see how long this lasts.
Right. Yeah, we're seeing some of that. It seems like everyone's trying to be fair to each other.
Mhm.
I think a seller doesn't want to have to go back through the process of doing the bids and all that, and they don't want to potentially take the risk of the
Yeah.
market going, too far south.
Yeah, we
Um,
definitely don't want to take properties back out to market and have to resell them, especially right now.
No, so it's funny you were saying you're not bringing properties out. My inbox is a lot less full today with all the brokers. I get all the deals that are out there, and we're really from Virginia down into Florida. I get all these deals, and there's a few deals out there that I'm still seeing from the guys, but the majority of people have kind of I guess slowed down, and the old wait and see approach. And
Mhm.
I think April is going to be a big month, and I think May, that first week in May, is also going to be very interesting. I know in the state of Florida, the governor just put a whole thing on foreclosure. They just stopped everything.
Yeah.
So, we're from the management side, we have an interesting perspective because we have lots of different owners. So we're hearing from a lot of the larger institutional people how they're going about it. We have the larger, call it regional players, and then we have the mom and pop players who own one or two big assets, and how they're doing about it. I think everybody's in this wait and see approach. I think by middle of April, we should have a little more knowledge. So what I'm telling everybody who's on now is I would love to have you back in the next few weeks to really take the temperature of how it's going. Are we getting warmer? Are we getting cooler? And that's kind of what I'm hoping. So that leads us to our lightning round, which is a lightning round of questions. I'm going to either answer yes or no or over under. And you ready for your lightning round?
I'm ready.
All right. Does the 10-year close under or over 1% at the end of the year?
Over.
Next time you're on an airplane, over under 90 days.
Over.
Next time you attend a networking event, over under 90 days.
Over.
Next time you attend a lunch or dinner with a client, over under 90 days.
Under.
All right, nice. Is the election going to be suspended, yes or no?
No.
Will Trump win or lose?
He'll win.
Does the stock market end over or under 20,000 at the end of the year?
Well over.
Ooh, yeah, look at this guy. Does the U.S. COVID-19 infection rate go over or under 500,000 in the U.S.?
Unfortunately, I think it's going to go over that.
And do you think you'll be on a vacation in the next 6 months?
Definitely. I think everybody needs a vacation after this.
I think we all do. I like your optimism. I just really want to thank you for joining us today. This was great to catch up with you. And I hope you and the family stay safe. And again, thank you again for joining.
John, thank you very much for having me on. I hope you guys stay safe also. Thank you very much. And keep up the good work.
All right, everyone, we hope you all stay safe and practice social distancing and make sure to wash your hands. If you have any questions or would like to find this video, please visit rkwresidential.com.